Thank you, Matthew. Good afternoon. So the title of this session is Changing the Face of Capitalism, a New Roadmap for Private Markets. It's a rather ambitious title and angle. It's even more ambitious that it is the very last and ultimate session of IPM. But I'm joined by very talented and ambitious panelists, so I'd like to thank them for joining. Starting with you, Johnny El-Hachem, CEO of Edmond de Rothschild Private Equity. You've been a partner of IPM for a long time, and I appreciate your support. And I think also the 16 different strategies you deploy throughout the Edmond de Rothschild platform gives a very clear example of the role of private equity in today's economy. Same with you, Pavel. Thanks for joining. Pavel Gierinsky, your managing partner at Abris Capital, a GP growth equity specialist based and operating from Warsaw and Bucharest, specialist in Central and Eastern Europe. And what you've done at Abris and what Abris has done since its inception is also a clear example of what private capital, private equity can bring to the economy. We'll discuss on that further. And Jonathan Dean, a pleasure to see you here again in Cannes at IPM. You're head of fund management and impact investing at AXA IM, the private market platform at AXA, the French insurance company. You have a strong focus, and we'll comment on that further, on impact investing that you deploy throughout different strategies. I'd like, before kicking off with you, gentlemen, to put perhaps this session into a broader context. Obviously, not obviously, but that's something quite clear right now. Private markets are the elephant, not in the room, but in the economy. Private equity, private debt, infrastructure is now too big to hide or shy away. It's become a very significant investor in our economy and plays a huge role in economy and society. I give you some figures just to illustrate that. For example, what the private equity deployed in 21 globally, over $1 trillion during the year. That's exactly the same amount that Standard & Poor's 500 companies deployed as in terms of capital spending that same year. Another example is employment. Private equity employs, private equity-backed company employ about 10 million people in Europe only, about 12 in the US, totaling more than 20 million employees across Europe and North America. Again, comparing to standard S&P 500 companies, that's about the same figure. So private equity has become huge, important, significant, and plays a very important role in our economy. And last thing to mention is obviously that private equity is putting capital at work in some very important areas and addressing very significant challenges. Coming first with climate, green infrastructure, the technology transition, biotechnology, healthcare, education. We all know that private markets are putting at work capital in very important verticals that are our future. So in times when the economy takes all the headlines, when what has been much discussed throughout the last 2 days was the sustainability of private equity returns, was the rising rate environment, I felt it was interesting and even important to discuss that private equity also has another role. Obviously delivering great returns to your investors, but also playing a role in the economy and society. And so that's the big ambition of this panel. And I'd like to start, if you're okay with that, by looking in insight. Starting with you, Pavel, if you agree. From your own experience and from the last few years you've been in the industry, how did you, at Abris, have an impact on your economy in Central and Eastern Europe. What did it change in the economy there?
Wow, what a question. Thank you very much, Antoine. And I'm still impressed that we have people in the room. So thank you very much to the audience. But let me start very quickly answering the question. I work for the private equity industry for 30 years this year. So this is 30 years working in Eastern Europe doing private equity investments. And the industry has changed dramatically. When we raised our first fund, it was $20 million, and we thought it was a very big fund. We raised our last fund, it's 500 million euros, and we think it's a small fund. Okay, so that's one perspective of change. But also, you know, investors have changed dramatically. Initially, we were an intermediary for DFIs effectively. You know, there were a couple of DFIs that had to invest in that part of the world, and we were doing intermediating role for them. We were delivering their money to some of the target companies effectively, okay? Now, DFIs are still there, they are playing a very important role, but there is a lot of commercial investors that dominate the market and find interesting returns and other interesting characteristics of the transactions. Okay, GPs have changed dramatically. We are not now managers of transactions. We need to be established professional houses that have highest standards of reporting and everything to interact with established institutional investors. Otherwise, we can't survive. Okay, and possibly, you know, the standards for peripheral markets like Eastern Europe are higher than other markets, and that's a subject for a separate discussion possibly. But you know, again, people either are adhering to those standards or they are eliminated. Okay, and our role has changed because we are not expected now to deliver return. Okay, return is always there and has to be there, and without return, obviously, there is no industry. Okay, but we are now expected also to deliver change, and one that you were talking about. We are expected to deliver standards in ESG, in you know, the climate change and so on. We all know that Eastern Europe is carbonized, but it also means that a lot of investors expect that making our investments, we help decarbonizing the economy, and that comes on top of the return requirements. Okay, it involves education of portfolio companies, but also the environment, okay? It involves working out standards and tools that could be applied locally for achieving those goals, you know, because the goals are the same for everybody, but the ways of achieving them may be different, okay? So we need to find a way of achieving those goals locally, but also convincing investors, our LPs, potential LPs, that those goals are achievable, and therefore making investments into us is something that they should be considering. Okay, I've mentioned climate change, but the same applies to DEI and any other aspect of ESG and transformation that currently is taking place. And I think from this perspective, Eastern Europe is probably not very, very different than other parts of Europe or other parts of the world. Obviously, we are part of the EU and have the same legal standards and the same requirements. It's simply a smaller market, and because it's smaller, sometimes maybe more complicated because there's less infrastructure to support some of this change.
Johnny, there's a word you've mentioned several times when we prepared the call, which is intentionality. Tell us at Edmond de Rothschild and in your journey as an investor, what it means for you.
Yeah, it means a lot. It means that private equity is the right tool to navigate through what we're living today. Intentionality boils down to the fact that it is our responsibility to identify the problems and intentionally put capital at work to solve them. You know, unfortunately, this crisis that we went through in 2022 was a bit predictive, but no one wanted to see it coming, you know. We tend to forget that we've been living on credit for the last 30 years on all metrics. Credits financially to create artificial returns through leverage. We've been living on credit on the human capital side, creating products that we don't need, but we're still buying them. Largest social dumping ever made in the human history. And all of this coupled with a sad reality about climate change that was denied by many, adding to it the fact that we all do agree in this room that resources are limited and there is not enough resources for all of us. And change of demographics that we don't want to cope with, and populism is all over the place to fight immigration that we need. And all of this with a negative interest rate environment where we have to say it, we've benefited from it to artificially create returns, while we've been saying that all of these problems would hit us one day. And the good news that it all came together at the same time, but unfortunately with the war. But I believe it's the right time now to intentionally roll up our sleeves, have a boots on the ground approach, and try to solve these problems while putting capital at work and use the know-how of men and women and the skills we have collectively here. You know, the private equity boys are not bad boys that are creating leverage out of return only. There is some of these guys that have been doing that. I think this is the end of the story for them. Now alpha is back, value is back. If you have the skills, you can create a lot of value. And it's up to us to do it this way, intentionally. And if you manage to gather the right people and the key success factor around any opportunity, with the capital at work, we can solve them, and we can still very optimistic about building a better future.
So intentionality is one thing, impact is another thing, right?
It's part of it, it's one of the pillars.
Could you add something about the impact journey as well?
Yeah, with pleasure. Look, I think for me, I'll put it in the context of IPEM. We were just talking about my first IPEM was around 7 years ago. And if I compared today, doing a walk of the floors and the kind of GPs and the products they're offering compared to what they were 7 years ago, you know, that is the evolution of intentionality and impact. You know, the fact that we're talking about this in the closing session, that this is a key topic for LPs and GPs in the room.
Before we were not invited.
I wasn't even here 7 years ago.
About IPEM, but generally speaking, at events, the impact guys were not ever invited.
We were hanging on to the coattails, and you know, now we get a voice, so we have the microphone. But for me, it's not a surprise. Right? Look what we've lived through in the last 7 years. Private equity, private capital is smart, right? Let's think about the world in terms of risks. That's your ESG frameworks. That's, if you're a GP, that's what your LPs have been talking to you about for years or decades, and now you have to adopt them, right? That is a standard. There is no compromise. We're not quite there yet on impact, and let me define impact quickly so that we're all on the same page. Impact is around problem solving. It's around identifying and quantifying problems with society or the environment, and then directing capital towards solutions that solve the problem. And then measuring the success of your solution at solving the problem. Take some accountability. That's what impact investing is. That's very different from ESG, which is risk management, know what your risks are. So if I go back 7 years, what's happened? We've lived through a global health crisis. So we all understand now what a global pandemic is and how it can affect us in Europe or in the US, which starts somewhere else, and healthcare used to be someone else's problem when it comes to global health. Second, we're living through a climate crisis. We're still there. You know, some people would say time is running out. Private equity, private capital is smart. It identifies these themes as an opportunity. These themes are not once in a year, once in a decade topics. These are once in a generation, once in an existence topic. So it is absolutely the right thing that we're talking about this here, and it's absolutely not a surprise to me that the private equity market has reacted and is offering product solutions for their LPs that go after these major macro themes.
Moving that to a rather regular discussion, which is public versus private markets. Intentionality isn't something you can really achieve in public markets. Are private markets better positioned, you think? Pavel, perhaps?
I think so for a number of reasons. You know, one of them is agility of private markets, okay? Let's face it. Private markets very much are driven by expectations, and private markets react to those expectations quickly. Okay, parts of private markets, let's say, those that aspire to be leaders, or those that aspire to set standards. Public markets are less quick in adopting to those standards. Public markets are more driven by changing regulations. Let's face it, that's reality. And in an ideal situation, we have a dynamic with private market where leaders of the markets define standards by their actions, and then those actions are codified into law for laggards. Okay? So laggards are those that follow the law, and leaders are those that set standards that are codified into law. Okay? Public markets have very different philosophy with that respect. Public markets have very different philosophy, but because they are predominantly driven by short-term returns. And short-term returns do not allow room for experimentation and development and making mistakes, because developing those standards sometimes involve making mistakes, okay? But in long run, it pays back, okay? And that's why private markets are swifter, more creative, and set standards effectively for the entire economy.
Johnny?
I can't agree more with what you said, but I would like to just add another element, is the element of time. Because even if you have the intentionality and the willingness to drive change, and by the way, in private markets, more than ever, being close to businesses, being in the driving seat, shaping the strategy, we have the capacity to navigate through tough times and good times to steer a company strategically towards more sustainable actions. And that's why the intentionality lies. It doesn't mean that the managers of a listed company cannot do that. They have the willingness and the intention to do so. But unfortunately, the time doesn't help them. And moreover, the financial analyst following their stock price and their roadshow will not forgive them for a mistake, as you said, or missing a quarter on earnings or on growth. You should have invited to this panel for him to answer this question our dear friend Emmanuel Faber. The guy is the most committed guy on earth towards sustainability. A silly hedge fund overnight buys 5% of the company and throws him out after decades of investments. Yeah, you cannot do that in public market. Let's stop telling stories about this. Impact should happen through the private market. It happens at the venture level when you seed a new company built intentionally to solve a problem. It happens in the private market because this is where we can really steer the things and drive the change while having the time. The time is our ally. It's up to us to do it. And I strongly believe that this is the right moment because we have the skills, and more importantly, you've mentioned that there is $1 trillion of values of transaction. But let's not forget another element. This crisis with the low interest rate and this money printing machines that didn't stop, that led us where we are, has a positive element as well, that we, the fund managers, have 2 trillion of dry powder available. So the question is for us, shall we do the same mistake for the next crisis to be worse than what we're expecting? Or shall we be responsible enough to act accordingly and use this money smartly in the right direction and find the right solutions? And we can elaborate on solutions for the audience interest, if you like.
Want to address the solution part, John?
I'll try. I mean, I think it's a tough crowd asking a question about public markets to a private market panel at a private market conference. We're not really going to have a voice of support. And for me, you know, how I think about public markets in the world of impact investing is on Johnny's page. It's a tool, but it's not the right tool. For us, you can do a public market strategy and you can bake in your standards, you can engage, and all of that, again, comes down to me around ESG management, sustainable investing. Private markets can be something which is much more there is a lot more accountability for your actions. You take a board seat, right? You are accountable for what happens to that company. Liquidity v. illiquidity. We commit to our companies for between 5 and 7 years, right? And our use of proceeds is to drive that company's impact over that time period. On the public side, secondary market transactions, I'm not investing primary stock in a company, I'm buying it from Johnny. You know, how am I creating an impact to that company? You know, this is a transaction that's going on between us. So I struggle with that, and I'm not going to spend more time on defending public markets at a private market conference. How do they affect us? Think about the denominator effect that happened last year. So for me, that's a headwind which is caused between the interrelationship between public and private markets. So it's something that if we talk about what are the things we need to look at going forward, solutions, it's bridging that understanding between how the relationship between allocation works and how this denominator effect can actually be a headwind for us and for the GPs that are raising money from their LPs in the coming months. I think, you know, the final piece for me is I'm going to actually answer a different question around public sector and private sector. So it's not the same question, but I use the buzzword public. There's so much that we can do with the public sector. If I take one example around the topic of climate, there is around a $4 trillion funding gap that needs to be met by 2050 if we're going to respect our targets around climate and land degradation and biodiversity. $4 trillion. Only 14% of the current investment in nature-based solutions is coming from the private market. 86% is coming from the public market. So if you think about all that growth in spending that needs to happen on the funding gap, I think we all have a huge role to play. So it's not a public market question, it's a public sector question, but I'm really encouraged by the collaboration that private market capital can do with public sector in the coming years.
I expect there are some peer GPs and LPs in the room as well. How do you think your pitch as fund manager will evolve in future years to really embrace that, you know, intentionality part?
Okay, if I am to start again, I mean, it has evolved already very, very significantly. We've been always saying that we are basically helping transition from private-led entrepreneurs to companies that are eventually sold to trade. Today we are saying that we are ESG transformation manager because we have realized that to successfully sell to trade, we have to professionalize those businesses, and big part of this professionalization is basically introducing all high ESG standards. But this is evolving further because very much as John said, it's not about risk management, it's about value creation and showing that we can employ standards of ESG, impact, and so on for value creation that actually delivers additional value for our investors. And it's almost philosophical at this stage because a lot of people don't get it. A lot of our managers in portfolio companies don't get it. We have to really sort of unlearn them about what they know about economy, managing businesses, to teach them again, okay, to help them understanding how it works. But if we are able to do it, that brings really terrific results in terms of delivering additional value. And that's the way we are pitching to our LPs now, but that's also the way we are pitching to some of the targets, okay? Because obviously we want to partner with businesses that are on the same wavelengths, or at least have openness for hearing that story, understanding it, and eventually adopting.
Johnny?
Yeah, the good news today is we are not anymore in a situation where LPs would start arguing is sustainability can oppose to profitability. And the best argument to bring forward from now on is that those guys who were using leverage to do artificial return, even if they have the intention to do it, they can't anymore with the interest rate we have. Hopefully this will remain. It's very important to contain inflation, but for the best and the best interest and the sake of all of us, let's pray collectively that the interest rate remain a bit higher, not to do the same mistake we've done previously, while containing inflation. Having said so, the good news relies on the fact that today the problems are known by everyone. Let me summarize them in 3 elements. There is an issue related to human capital. The previous panel was speaking about the talent crisis. Human capital in all industries across the board is seeking to work differently, using different tools, getting more épanouissement, being more productive and doing things differently. Human capital is a major issue in a continent which is an aging population in Europe with a only triangle on Earth which still has a positive demographic dividends growing from Morocco to Yemen, from Yemen to South Africa. Some sees it as a threat, we see it as an opportunity. That's where, with human capital and investing in Africa from one side, reducing the dependency on Asia with the disruption of value chains that we went through, going to Eastern Europe, going to North Africa, strengthening our ecosystem. This is the way we should put capital at work to solve these problems that we went through. Second element, which is a major problem, is the problem of resources. And for that, we need to invest massively in infrastructure, which help us to gain energy resiliency, energy independence. Technologies are out there. Let's scale them through project finance and through infrastructure in a blended finance approach. We should use the public money to use it as an opportunity in a way to de-risk some of the projects and then roll up in the private sector to the largest extent. And to conclude, the most important element going forward that we need to tackle, and that sincerely we don't have another choice than dealing with it, is this transition. To finance this transition, the private market is our responsibility to do so, but the good news lies in the fact that technology is an enabler, and technology can help us spread the thing at a larger scale, replicate it, reduce the cost, and there is many examples out there. We can use it for the benefit of food security, for the benefit of what we need in terms of agriculture to feed 8 billion individuals. Don't believe that we all become vegan or eat organic. This is impossible. We need volume. But we cannot continue doing what we're doing, destroying the soils to produce volume. However, out there, we have the right technology to do so. Just to your previous question about the private versus public market, who's in the room can tell us on $1 spent by the food industry, the 10 major food companies, on $1 spent, how much goes to research, in your opinion? Can anyone tell us on $1 spent to research and development? 4%? 0.4%. 0.4%. So imagine the gap, the funding gap we need to deal with the problem. Where the money is going, it's going to short-term fixes, to brand building, to products that doesn't bring real solution. The money should go upstream to deal with the real problems. And this is the intention that we should put behind all of the investment we're doing. And I can illustrate more beyond agriculture, can speak about the opportunity that lies in what's happening in Eastern Europe, in Africa, which can be a major source for development for us to secure our supply, diversify our base. Plenty of opportunity out there, provided you use the right skills with the right intention.
John, you want to have the last word about your evolving pitch for impact?
It's very unusual that you get the last word over Johnny, so I'm gonna enjoy this. So look, I think there's a glass half full, glass half empty approach to this. So I'll start with the glass half full, glass half empty, which is what can GPs do? There's regulation coming. There's SFDR classifications. That's a scary word. You get accused of greenwashing, impact washing. It's complex. I don't want to put my name there, reputational risk. It's a lot easier if we don't participate, right? That's a view. And if you're the LP, I'm quite happy with my traditional approach to private market allocation. I haven't figured out what impact investing is yet. It's a project. I'll do it next year, right? These are the sort of warnings around inertia that can happen in the market, and nothing happens. Or I'll do the glass half full, which is hopefully where we'll be after this panel in the Mediterranean bar, which is take a leadership role, right? Don't follow the crowd who are in a state of inertia. Be the manager that wants to articulate what their strategy is in terms of SFDR classifications. Be the LP that isn't waiting in project mode to think about what their allocation is going to be towards impact investing, and be the movers, be the people that move now. And I think we have the people in the room, we have all the right stakeholders in this conference, and it fills me with a lot of confidence that we've moved a long way since we first started coming to these discussions. And the opportunity is clearly there, but it's the responsibility of the GPs not to hide in the shadows away from the obligations around transparency and committing to be accountable for what their investments are looking to deliver. And it's the responsibility of the LPs to start making more asset allocation decisions which are based on the outcomes they want to generate beyond financial return. And I think in the current markets, these major trends around climate, around healthcare, it's a huge opportunity to do so.
Thanks, Johnny. Thanks, Johnny. Thanks, Pavel. It was really a pleasure to take on such an ambitious topic with you this afternoon, and to conclude this afternoon session and IPEM's Cannes 23 edition with you. The three of you really embody, I think, the transformative power of private equity. And as John said, it's now time to see the glass half full, right? And move on to the Mediterranean Bash upstairs at the Roton terraces. Thank you very much, gentlemen, and thank you to the audience.
Thank you.